Alrighty, so we're back to looking at what happened last week in the mortgage-backed securities, and we're talking about these 4 days because Columbus was a holiday. So these four, let me take off this box and let's talk about what happened. So Friday we saw the big jobs report and it reacted to it. You see that here, the market actually digested what was going on and said, whoa, wait a minute. So in reality, the jobs report was actually showing 885,000 job losses as opposed to what we saw here, which was a seasonally adjusted 336,000 job gains. This is seasonally adjusted, and 70,000 of those were from teachers, and they come back every single year, so that should be adjusted out. Retail job gains were about 20 grand, but looking at other reports, we showed huge layoffs in the retail industry, and leisure and hospitality showed some job gains, but hotel occupancy is way down. So some things just aren't adding up here. So maybe they're hiring incorrectly or it's just jacked up data. But this right here, this 336,000 was seasonally adjusted higher by 1.2 million, which is how they got to the 336,000 as opposed to where it should have been at 885,000 job losses. So when you actually look at household surveys, there were only 86,000 job gains, and unemployment stayed around 3.8%, which didn't fall, so it's kind of holding tight. But full employment, like full-time employment, is down 692,000 over the last 3 months. This is massive, and it's just not being reflected in some of these reports. So the last time that we saw declines like that were back in like 2001, 2008, and during COVID. So all these led to recessions. So the signs are there, and there's just confusion in the data. And a lot of it is they're basically just don't know what to believe anymore. So it's really beginning to show some weakness in the economy. And when we go to the next day here, where we're looking at where it was actually pushing up, it's still looking at that. But the producer price index came out, and it was basically showing that, hey, inflation is increasing. We also have Israel that's impacting this. So when world conflicts happen, a lot of times people will jump into more secure investments, and sometimes they go into bonds, but it just didn't break above this Fibonacci level, right? So this is acting as a huge point of resistance. It tried to, but then it closed below it, which means that this point right here is what it's trying to break above, and the market just isn't having it. And then it was reinforced the next day by the consumer price index, which also showed that we had inflation increasing a little bit, but that was kind of expected. But they're digesting everything. This is kind of just like normal market movement, even though it looks big and scary, this big red down. One of the biggest reasons for the inflation is because gas is so expensive. You add that in, rents are still getting more expensive, so that's impacting. And then motor vehicle insurance is up like 19% year over year. So we're showing that there's a lot of inflationary pressure, and the market's reacting to that, along with everything else that's going on in the world, along with trying to understand what's going on with the jobs and initial jobless claims, and just a lot of data that's out there that is conflicting. So if you look at kind of the bigger picture, this is something that's kind of developing into what's called a flag pattern. And you see this Friday, really not a whole lot came out, where you're really not a lot of big data, and they're just kind of developing, and that's why it just kind of stayed here. So it didn't go very far. It's just in this range, and it's going to wait for additional information as the month goes on. But overall, if you look at this trend line here, this is where we were. If we can manage to break above this point of resistance, and I don't know that we can ignore these trend lines or these moving averages, but this is the trend line itself, and it has a lot of movement to go up. But even if it did, this only takes us back to where we were in August or September, right? So sometimes it's good to actually get a bigger view on this. And if you look year over year, you see, this is where we went up. We've been in this big trading range, and we're going down. But to give you a bigger perspective, this is over the 2 years, and this gives you just how massive that rate increase was as mortgage-backed securities dropped. And now we've been in more or less a long-term range, wide range, but we broke below that. And now what we're doing is we're fighting to get back into this range. And it just depends on what happens in the world. So a lot of data, a lot of conflicting data, a lot of world events happening, and really the market's just waiting to see what's going to happen. And this is where market experts, tongue-in-cheek, go, the market will either go up or it'll go down. And that's the brilliant prediction. All right, hope you guys have a great week, and I will see you next week.